Good morning, everyone. Jason here. Today is Saturday, June 24th, and this is the aftermarket update for Friday's trading action. So it is good to be sitting here with you this morning, talking to you about our trading on Friday. We had a really nice day Friday. Friday had a lot of opportunities with our market maker levels in a number of different markets. So if you are familiar with our trading here, you know that we trade the CL and ES, but we also provide you with a set of dynamic support and resistance levels that we call our market maker levels. These levels provide opportunities in many different markets other than just the CL or ES. And so I want to spend some time with you today. I want to talk to you about just kind of how those levels performed on Friday. I want to show you I think it was 112 tick, 110 tick CL trade that we took using the market maker levels. I want to show you an entry location that we have in that $47 setup that we provide you on the ES. It was really chock full of good opportunities here today. So the first one I'm going to talk to you about is this ES opportunity. So this red line right here represents that $47 setup that we talked to you about, that we give you in that extended trial. This gave you a really nice opportunity to short out right up here at 34.75, and you could have been targeting this area that actually would have been the long on the day, which is your market maker level down there at the daily structure target. So if you grab this and just measure this down to the low, that's 6.5 ES points. So that's 26 ticks. 26 ticks at $12.50 per contract. That's $325. If you trade two lots, that would have been a $650 trade right there had you taken that. And again, we talked about this in the trading room. I did not take this trade. I was really focused in on this CL thing that I was doing, but that was an opportunity there as identified by that $47 setup. The market did what we expected to do, right? It kicked the signal and paid the target. So on the ES specifically, you look for your entries to be either at that number or one tick off of that number. And in this case, it got to within one tick down here of this daily structure target. What we talked about specifically in the trading room is that once we hit this daily structure target, if we did not come down to the level below it, then our expectation level is that we would hit the daily structure target on the other side. And if you take a look, if you draw this entry location here and you draw it up to this daily structure target, the expectation level was that there would be a 10.5 point ES move. And so as the day progressed, the market sort of rallied around, but you can see here that the market had a really explosive move to the top side and eventually came right up here to your daily structure target. Now, what we talked about on your trade plan is this was going to be an area to look to possibly get short. But again, if you'd have taken this entry here or this entry up to here, you may have taken another trade, but the recommendation obviously would be to just kind of sit on the sidelines and watch. But again, you can see we came right up to this daily structure target again. That is a first-time touch of your market maker level, and then the market sold off considerably all the way down into this ETH session open price. So you're going to see a theme here today in all of these markets where these market maker levels kicked the signal, paid the target, and then rallied to the opposite end of your market maker level. So again, this was the ES today. I only took the trade that I'm going to show you, traded the day on the CL. That's where I kind of participated today, was over there on the CL. And but again, that is the ES, and your market maker level is really giving you some very strong opportunities over there. So if you just took this is our kind of our planning tool that we like to use. If you said you were going to get long here on the ES, right, and that's one tick above that actual level, and you said you were going to have a 2-point stop or $200, which is what I typically like to do. Your first target could have been here, right? If you did that, then that is almost the 1-to-1 risk reward. If you went to the second level here, that would have been a 2.5 to 1. If you went to the third level here, that's 4 to 1 risk reward. But if you held on all the way to the target, which we talked about in the trading room, then that is a 5-to-1 risk reward, right? You would have risked $200 to make $1,050. So that's a 5-to-1 risk reward ratio. And as you know, if you're a follower of the videos in here, that we talk all the time about cutting your losers short and letting your winners run. And this is the tool. This market maker levels are the tool that is going to allow you to be able to look and get that done. Do you win every day? Absolutely not. But what you do is when you are in the right position and you're at the right spot on the trading day, then you absolutely need to maximize your opportunities. Let's take a look at a couple of other markets here. We'll start here at the YM. And again, if you look here on your market maker levels on the YM today, a little bit different in terms of we didn't quite hit the target on either side. But what you can see here is that this daily structure signal, which is a first time touch long right after the open, gave you a decent opportunity here as well. So if you said, and again, I don't trade these markets, so if something that I'm saying here doesn't resonate with you, don't take that necessarily into account. What I mean by that is if your stops are different than what I'm projecting out here, then you kind of have to manage through that. But if you just said I'm going to have a $200 risk, all right, so $200 risk would be right about $220 risk is basically what I usually use on the CL, so I'm going to use that here. There's your $220 risk. That's 11 ticks. There is the first target. That would be a 1.5. Your second target here would be a 3-to-1 risk reward ratio, right? So if you did it that way, get in here at the entry and then down here to this your stop, and you would have a 3-to-1 risk reward ratio, right? So that would be risking 220 to make 660. All right, so that's the way it looked here today. And then kind of from there, just kind of rotated around that area for the balance of the day, came back down. But again, you can see how the market maker levels provided you with excellent structure here on the YM today. Taking a look at the TF. And again, I'm just going to kind of use that same $220 risk here. If you got into, let's say you went first time touch here at the daily structure signal and you took a stop, right? So let's say here, there's a $220, let's see, 220 right there. And that got as high here as $200. So it bounced into this level, rallied up to here for $200, didn't get to the next target. Maybe you get out of break even, maybe you took a stop there. I'm not entirely sure, how you would have played that. But what I do know is that if you said, okay, let's say I took a stop out for $220, then you get back on the horse again. There's your $220 stop, and you say you want to ride that up to the target up there. That is a 8-to-1 risk reward, right? You went structure target to structure target, and in fact, it went all the way up to the structure extension. So if you just said, look, I'm going to trail stop behind this, and if it gets to that upper band, that's a 10-to-1 risk reward ratio. But again, low of the day, down here off of your daily structure target market maker level. So let's assume for a minute that you took a loss here at the daily structure signal for $220, and then you took this all the way up to this target. You would have been positive about 150 ticks or $1,500 on the TF today using your market maker levels. All right, so we'll take a look at one more market here. We'll take a look at the NQ. If you drag this over here and look at it here on the NQ today. Again, same kind of theme here today, right? You had, you came right down, kicked the signal, pay the target, and let's assume here that you took the same $220 stop. That would have been right here, okay? You would have been right here. That would have been your stop. So you first time touch long, you take a $220 stop. And again, if these numbers don't resonate with you, then apply your particular filters, etc. And then, so you take the stop there, but then you come down here to the daily structure target, you kick the signal, pay the target, and you add this area here, and you said, okay, that's the structure target. There's a $220 stop right there, and your target is the daily structure target up here. That would be a 7.5-to-1 risk reward. So again, took a $220 stop. That would have given you a $1,400 winning trade if it comes all the way up to the target. And there it is, right? So again, these market maker levels giving you excellent opportunities today in these markets. So the final market that we'll take a look at here is the CL. All right, we'll take a look at that CL today. And we'll come down here and we'll go, and this is the trade of the day actually that I'm going to let you look at. This is the trade that we took in the trading room today. And so we get in, my initial trade today was here off the structure signal. I had an 11 tick stop, $220, which took me out right there. Okay. So that was the first trade, took me out right there. I immediately turned right back around and got long. So that was 55. I actually got long at 57 there, and I had a 10 tick stop on this particular trade. And then we look to carry this all the way up to the structure signal on the other side, but I actually get out right there at 13. And so we had one trade, and then there's that took us out as a stop, and then we had a 5.6 to 1 risk reward here on that second trade. So again, market maker levels, that by the way, we bought the low of the day on the CL and the market just rallied all the way up through it. That's the trade that I'm going to show you in the trade of the day here, just so that you can say, just so you can see that I'm not just cherry picking, particular market maker levels and say they worked here and whatever. I actually took the trade live in the trading room today. And so I wanted you to see that. Trade in its entirety. Actually, not in its entirety. I did cut it down. It lasted about, let's see here. We got in down here this morning at 8:35, and the market finally hits that target around 9:05. So it's about 30 minutes. So what I did is I cut it down to about a minute and a half, put some music behind it just so you could see that we were able to get in at that structure target and that we did ride it up to that 13 level. Now you may ask why 13 was the target here and why I pulled it off. Let me show you here really quickly. So one of the things that you know is we have this $47 setup that we look at, and it is in that $47 setup that we give you a super strong entry, and it's a retracement entry. And so as we were rallying today into from that level down below, this let me show you this here. This red line that I have on this chart right here represents this red line here represents that same setup. So as the market rallied up into it, you could see that it went up to 20. That was the high, and then it pulled back all the way down to 76. So that's why you see me at the end of this video. You're going to see me yank this off. But that area right there, that red line, is that $47 retracement setup, and that does provide you with some excellent resistance. In fact, in this case, it went, if you'd have gotten in short at 20, at 13 here where this red line is, then you would have seen, in fact, let me just do this a little bit differently. Let me remove the drawing tools here. Let me just remove some of these. Let's see. We're going to remove all of these. And then I'll just put a horizontal line. This line will end up being blue here. But it was right here at this 13 today. That is, so that was the target, right? So here's the entry down here. There was that targeting area. I was going to try to go a little bit higher, but we did have that conflict at this 13. You take this 13 and you measure it down to there. That was a 37 tick move that you potentially could have shorted down into that area, right? So anyway, that's why I took it off at 13 up there today. You're going to see me kind of yank it off real quick there at the end. I consolidated this trade into about a minute and a half. So just understand the actual trade itself lasted a little over 30 minutes, about 35 minutes. And so I went ahead and yanked it off really quick. But we talked about that in the room, and I gave people notice. It looks like it's faster because the tape is sped up. It's actually faster than what it was in the actual room that yesterday. So anyway, I'm going to let you watch the trade of the day. And so that, again, the point of this is so that you can see that not only, we're not just cherry picking these, we're actually taking them live in the trade room. And you would have the opportunity to do that if you kind of understood the program and understood the trading material. So again, without further ado, here is that OTG CL trade of the day. 47 is the stop. There's hit, and I'm in at 57. 47 is the stop. right, so what you saw there at the very end of that trade is you saw me lift the target up from 13 to 22 because I did think we could actually make it up to 22. That's where the daily structure target was. Once you saw us get up to 15, I said, you know what, that's enough. My original target was 13. We got to 15. I want to make sure that I don't give too much back. And you saw me quickly get out. It was like I said, it was that tape is sped up, so it looks quicker than it actually happened, but that is what we ended up doing. So it ended up being a really nice trade, and the market maker levels really did their job yesterday. They really provided you with some excellent opportunities. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.